In this presentation, we will take a look at multiple choice questions related to governmental accounting, going through those questions and then practicing test-taking skills with them. First question, account used to withhold part of progress payment for construction until final settlement of the contract. Either A, encumbrances, B, appropriations, C, contracts payable, retained percentage, or D, construction expenditures. Let's go through this again using the process of elimination. Account used to withhold part of progress payment for construction until final settlement of the contract. Either A, encumbrances. Now we might think encumbrances because that's kind of like a holding account, so I'll keep that for now. B, appropriations. That's a budgetary account that we could record at the beginning, but I don't think it's really that. I would go more for encumbrances over A over B, between those two. C says contracts payable retained percentage, and that again sounds kind of appropriate. We're going to retain a percentage, keep a percentage. And then D says the construction expenditures. That's going to be an expenditure, like an expense type of account, so I don't think it's going to be a normal expense type of account if to have a holding account. So between A and C, let's go through it again. Account used to withhold part of progress payment for construction until final settlement of the contract. Is that encumbrance or contracts payable retained percentage? Now, of these two, the encumbrance is what we put on the books at the beginning of the contract, basically recording the contract. It's a holding account until we record the expenditure related to it. But what we're really looking for is C here, the contracts payable, and that's when we basically say, you've done this work thus far, but we're not going to give you the full payment yet because we're only going to give you part of the payment for the work you've already done, to kind of make sure that you finish the job, and we'll give you the payment at the end of the job. So that's going to be C, contracts payable, retained percentage. Next question. Premiums received on tax-supported bonds are usually transferred to either A, the Internal Service Fund, B, Debt Service Fund, C, General Fund, D, Special Revenue Fund. Let's go through this again using the process of elimination. Premiums received on tax-supported bonds are usually transferred to. Now, so we have a tax-supported bond. So we're issuing a bond. Then you want to think, are we talking about the government-wide activity, or are we thinking about the fund activity? And here, of course, we're considering the funds, because they're all funds listed down below. So then the question is, are we using like a modified accrual basis or an accrual basis? Most of these funds being governmental funds, except for the Internal Service Fund, and therefore using a modified accrual basis. So we want to keep that in mind because this is a long-term debt. Then you might want to actually write down what the journal entry would be on the government-wide, and then think about what it would look like on the fund accounting. So if we were to have a bond with a premium, typically we would say that we got cash of something over the face amount of the bond. So it would be like 110, let's say. And then we have the bond payable. So this is the bond payable, and it's only for the 100. And then we have the premium, which is going to be the 10. That's what would be on the government-wide activity as a whole activity. Then we're thinking about the funds. Well, which fund would this go to? Now, if the debt service fund seems appropriate, and that's going to be good. However, be careful on the debt service fund because we're not recording the whole bond payable on the debt service fund. So we're not going to be recording the bond payable there. We're going to be recording the amount, as is the question here, related to the premium in the debt service fund. If the bond was taken out, say, for a capital project, then we would put the 100,000 of the 110 into the capital project most likely, and then the difference going to the premium going to the debt service fund. So in this case, it's going to be B, the debt service fund. Just be careful in future questions that we're really talking about the key point here being the premium received on the tax-supported bonds. The principal received, the 100,000, may be going somewhere else.